Today is the NYSE debut of the Robinhood Ventures Fund 1. It's a closed-end fund that gives investors exposure to private companies, aligning with Robinhood's mission to democratize finance. And joining me now is Shiv Verma. He's the CFO of Robinhood. Shiv, welcome to the New York Stock Exchange.
Thank you, so excited to be here.
So can you break down this fund for us?
Yeah, the big picture is retail did not have access to private companies. These are staying private for longer, and we wanted them to have access. So we are doing a closed-end fund and giving retail customers the ability to own some of the best private companies in the world.
So what is the difference between a closed-end fund and an ETF?
Yeah, amazing question. So on an ETF, money can come in and out on any given day. On a closed-end fund, you raise a pool of capital and the money can't leave. And this is great for private assets because you don't have to worry about redemptions, all the capital is there, but it's still exchange traded. And so the best thing is for customers, you can buy and sell it any day, you don't need to be accredited, and it acts very similar to what customers know like an ETF.
And what are the companies that investors will have exposure to if they invest in this?
Yeah, so on day one, we contributed 8 amazing companies of over $350 million to the portfolio. Large companies such as Databricks, Stripe, Mercor, Ramp, Airwallex, Revolut, Aura, the Ring Company. These are all excellent late-stage companies. That's the seed portfolio. We then raise capital on top of that so we can continue to invest in some of the best companies in the world.
And you use the term exposure. You're saying that investors will have exposure to these companies. What is the difference between exposure and an investment?
Yeah, great question. The reason we're saying an investment is we've actually owned the equity of these companies. So every single company that we've done, we went through the front door, we purchased their equity, and it's in the fund. There are other companies that will go and buy derivatives of the actual exposure so they don't own the company. But big picture for our retail customers, they should know that we own the equity, all the companies are on board, and it's a great way to actually be shareholders in these private companies.
And I understand the focus is late stage private companies. Is that strategic?
Yeah, so we always start with the customers. When we talk to our customers, the main thing they wanted to is access to some of these companies. Databricks, for example, $134 billion valuation. Stripe, $150 billion valuation. So these are companies that customers know. We know how to underwrite to them. We think they're good investment. So we started specifically with these late stage growth companies.
What problem are you trying to solve with RVI, that is the ticker symbol?
Yeah, so if you are ultra wealthy or you're an institutional customer, you can access private markets. But traditional retail, the mom and pop, didn't have access. So that's what we're trying to solve. There are 4 pain points that customers had. They wanted daily liquidity, so they can trade it any day. They didn't want to be accredited. So 85 to 90% of Americans are not accredited, so now you can buy this fund without being accredited. They wanted low and competitive fees, so it's a low 2% management fee, 1% for the first 6 months. And they didn't want to pay what's known as carry. Carry is what venture capitalists charge a portion of the profits to the customers. We don't have that. And so those are the main problems we were trying to solve: access and making sure that customers can purchase in a fund that solved all of their needs.
And how does this align with Robinhood's broader mission of democratizing finance, making it accessible to all?
Yeah, so we started in the public markets. We want to do it for the public markets to the private markets, exact same thing. So if you think back 10 years ago, before Robinhood started, it was really hard to buy Apple or Tesla or some of the names and companies that you loved. Today, the same problem happens with the private market. So all we're doing is taking that same ethos, what's in our DNA, give people access, and now they can do it with private companies as well.
And can you give us a breakdown of what a closed-end fund is?
Yeah, so a closed-end fund means it's a pool of capital, you raise it on day one, and then the fund itself trades, but no money comes in or out. That's really important when you hold private assets. Some of these are not liquid, and so for the retail customer, we wouldn't have to worry about redemptions or money coming in and out, and so the closed-end fund just means it's closed after today's, we're raising the IPO, but it can still trade. And so if customers think the fund is worth more than the underlying assets, it can trade at a premium. If they think it's worth less, it can trade at a discount. But big picture, they don't have to worry about redemptions. You don't have to worry about money coming in and out. It's a closed-end pool of capital where we own 8 investments today, and now we can continue to make future investments.
And what is your hope for this fund in our last moment together?
Yeah, so if you notice, the name is Robinhood Ventures 1. That's by design. We hope to be back here on the stock exchange floor, hopefully in the not too distant future, with additional funds. We really believe this is a great way for customers to get access to private markets, and this is just the beginning.
All right, Shiv Verma, CFO of Robinhood, thank you so much for joining us at the New York Stock Exchange.